Did you know that your family could lose nearly half of your inheritance to taxes? That's right. Without the right plan, the government could take up to 40% of what you've worked your whole life to build. But here's the good news. With a few smart moves, you can legally reduce this to zero. In the next several minutes, I'm going to reveal who actually pays inheritance tax and when it applies, the exact dollar thresholds and tax rates right now that are in effect, and 3 proven strategies you can use right now to protect your family's wealth. Hi, my name is Tommy Cloud. I am president of Third Act Retirement Planning. It's a company that I started back in 2000. Our why is to help clients use their new resources to buy back their time, energy, and attention for what matters most, loving God and engaging in the good works prepared for them. Let's get started. Who pays inheritance tax? First, let's clear up a huge myth. Most families will never, ever even sniff an inheritance tax. And I'll tell you why. The federal government does not have an inheritance tax. Instead, there's a federal estate tax, but it only applies to estates $13.6 million. And for married couples, that's over $27 million. Only about 0.2% of estates pay this tax. So that's the first thing. But here's the catch. Some states have their own inheritance taxes with much lower thresholds. Only 5 states have an inheritance tax, and that's going to be Kentucky, Maryland, Nebraska, New Jersey, and Pennsylvania. In these states, taxes can start as low as $1,000 to $25,000 depending on your relationship to the person who passed away. If you live in one of those states or inherit property there, you could owe state inheritance tax, even if you don't owe federal estate tax. Let's talk about the current thresholds and tax rates. The federal estate tax, the exemption is $13.61 million per person and $21.22 million for couples. Currently, as I sit here today at the end of 2025, the tax rate up to 40% on amounts above the exemption. So the tax could add up a lot. If you had 30, 40, $50 million and you're paying 40% on that, that's a lot. The state inheritance tax, again, that's going to vary by state and relationship to the deceased. Example, Pennsylvania is 4.5% for children, 12% for siblings, and 15% for others. New Jersey, on the other hand, is 11 to 16% for non-immediate family. And Kentucky is up to 16% for distant relatives or friends. Now, they have had an important update. The federal exemption is set to drop to about $6 million in 2026 unless Congress acts. If your estate is close to this, you need to plan now. Again, that's $6 million in 2026 for the estate tax to kick in at any levels above that. So let's talk about 3 proven strategies to minimize or avoid inheritance tax. Number 1, you have annual gifting. You can go ahead and use this strategy to give $18,000 per person per year tax-free. And that's $36,000 for married couples. So if you have a child, you could, as a married couple, give them $36,000 a year to start reducing your taxable estate. That's $360,000 over 10 years that you could move out of your state completely tax-free. The other thing you could do is set up an irrevocable life insurance trust. Move your life insurance policy into what we call an ILIT. And again, that stands for Irrevocable Life Insurance Trust. The death benefit passes to your heirs tax-free and doesn't count toward your estate limit. This can save families hundreds of thousands of dollars in taxes. And then strategy number 3 is to donate appreciated assets to a charitable remainder trust. You get a tax deduction now, income for life, and the remainder goes to charity, removing it from your taxable estate. Here's some additional tips. Check if your estate has an inheritance tax. If you're close to the federal exemption, talk to an estate planning attorney ASAP. Use the step up in basis rule. Most inherited assets get a new tax basis, so your heirs pay less capital gains tax if they sell soon after inheriting. Look, inheritance tax planning isn't just for the ultra wealthy anymore. With state taxes and changing federal limits, even some wealthy middle-class families may need to pay attention, and especially in those states that I mentioned before. Here's what to do next. Check if your state has inheritance taxes. Number two, if your estate is anywhere near these thresholds that I mentioned, $6 million in 2026, schedule a free sudden wealth planning session with me, and we can discuss it together and talk about what might be the next best steps for you. Or you can also take our quiz to see how much you need for retirement. That's in the description of this video as well. Hope you've liked and enjoyed this video. And if you have, go ahead and subscribe. We're going to have more content continuing to come out to help you be a better steward of the money that has been entrusted to your care.